The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the first trading session of 2025 came to an end with a fairly quiet day in the grains and oilseeds. That U.S. dollar index up at 25-month highs, no doubt acting as a headwind, I would believe. Corn and soybeans, though, found some green. Cattle futures had a good day. Mixed in hogs and mixed action in the outside markets, along with that dollar being higher. Let's take a look at this trade action as we're working through the back end of the holiday week and getting into the new year. Joining us, Brian Doherty with Total Farm Marketing. Brian, Happy New Year, and thanks for being with us here today.
Jess, Happy New Year. Yeah, it's an interesting day in the sense that markets were closed yesterday. We didn't know how things were going to kind of move today, and they just really didn't move much at all. So interesting, though, that we did see corn and beans kind of claw higher at the end again. So that firming tone continues ever so slowly, I guess, by some accounts, with corn now closing higher 7 of the last 8 sessions. But to your point, wheat was off a nickel, and it's battling that continuous sort of uptrend in the dollar, strength in the dollar, confidence in the dollar. Those things are problematic to keep a rally going. So where I'm going with this is I look at corn, and it's rallied about 13.5% off its low on March futures. Farmer selling has been picking up. There's the deliveries against basis counter, all those things. Such a large amount of corn and priced earlier in the year. And then you've got the South American element there as well. So a lot of things we can talk about today, but in the end, kind of a quiet close.
Yeah, kind of a quiet close. I'm curious your thoughts. Let's start with the farmer selling aspect here. Tuesday's session to close out 2024 was obviously very strong. Felt like that may have pushed some farmers to make some pre-New Year sales, but I know traditionally some folks will wait until the calendar flips to a new year to make some sales. So, I mean, what's your feeling? What are you gathering from producers here, especially corn getting up around the 460s here on this recent rally? I mean, are we going to see even more farmers selling potentially ahead of next week's USDA report?
Right. So the report's out on the 10th. And farmers are trying to decide what to do because things have rallied. So corn has rallied, as I mentioned. We take that March corn as an example there, and the way it's pushed to the upper end of its trading range here since June. And so that's impressive, but it's taken 4 months to rally over 50 cents. And that's not impressive when the funds go from 350 million contracts short to probably 170,000 long, and we only can get 56 cents out of it. So what's happening is I believe, and I think we as a group, when we talk, we visit with a lot of farmers, and a lot of farmers are making sales, not necessarily a lot of sales, but everybody's rewarding this market to some degree. It goes back to where I started this conversation, get anywhere between a 10 and 15% increase in value from the harvest low, and it just brings natural farmer selling. The flip of all this is the corn producer, soybean, wheat, they've been beat over the head now for 2.5 years. And so even the smallest of rallies seem kind of like a victory. The product, though, is still excellent value to the end user. So even though corn's rallied, it's still for many just a great bargain, great buy. And what's driving, I think, the market is good export sales. That's why they've been strong, good value, and the likelihood that we're going to continue to see end users maybe step up their purchases a little. You got a South American equation that could get kind of iffy in a hurry if that drier weather in Argentina and southwest Brazil were to continue, let's say, another 15, 20 days out.
Well, and that's I'm glad you brought that up. Let's bring in the soybeans here a little bit more. And thinking about that dryness, it's starting to be an issue to some degree. But then I'll throw this too. A lot of private estimates for Brazil's soy crop continue to get raised into the 170s million metric tons. I mean, you look at the monster potential that's still there, and it just feels like, new year, soybean market, the bearishness, there's a lot of bearish factors out there as headwinds for soy right now.
Yeah, kind of think of the supply of soybeans is one large, record large, and to your point, a private estimate today, 171.4 million metric tons. USDA is at 169. If you might remember, about 3 months ago, when bean prices rallied nicely in September, the talk there was about 164 on dry conditions. So it's continually crept higher and higher. The interesting dilemma here in the U.S. is new crop beans are not very attractive. So if I will switch gears a little bit here. If we talk about an acreage shift out of beans to corn, and one of the reasons why December corn has only been able to rally less than 20 cents is there's talk of 2 to 3 million acres. Well, 3 million acres of corn at 180 bushels an acre is 540 million bushels you can tack on the carryout. That's back to 2.2. The interesting thing with soybeans, though, at 470 million, if you take 3 million acres out of beans, now you're talking 50 bushels an acre, 150 million bushels total. Now your carryout's down to 320. Probably doesn't justify $10-ish beans. Probably something more 11 and a half. So things could get kind of interesting here if weather's a concern. But the visual picture I wanted to give is, I think if you look at South America, you got a really nice, let's call it a Ram. It's got an 8-cylinder engine in it. That's clicking on 7.5 cylinders right now. So everybody's wondering, are we going to go back down to 7 or 6 cylinders on sputtering and dry weather and crop problems, or is this just going to pass and we end up with 171? That's going to be tough for the market to find end users to come in and buy U.S. product, especially with the dollar higher.
Yeah, and a dollar, I have to think with the wheat trade overall Thursday, just succumbing to the pressure of that dollar. I mean, up above 109, that's, very lofty levels, Brian.
Yeah, it's the highest. I think you said 22 months. I have to go back, or the highest
Yeah.
is 2022. I don't remember the number, but it doesn't matter. It's a trend of an increasing dollar, and that just bodes well, unfortunately, for an inverse relationship with the price of wheat. So wheat has really had a tough time gaining some traction, even though, again, it's good value. And gosh, you look at Russia's supposed crop, almost 40% is poor. The war's still a problem. It seems like wheat is just a good value, but it's got the 800-pound gorilla of the dollar hanging over it right now.
Yeah, very true. I think about this report coming up on the 10th. The January WASI is always chock full of information. It could be a very volatile report, kind of kicking off a new year every year. What's your thoughts from a risk management standpoint here, about a week out now from that key report, Brian?
Well, let's just think about last year a little bit. If you might remember, the January WASDE report is the last report to add yield, right? And both corn and soybeans picked up yield last year, 2 bushels in corn, if you might remember. I don't think we can pick up 2 bushels in corn at 183. We might lose 2 bushels, and maybe that's why the funds are so strongly long this market. They might be anticipating that the yield number is just too high, whether that's baked into this lower moisture corn that was harvested, the second half of harvest, a lot of 13-14% moisture corn, or whether it's just the yield. But there's something kind of going into this corn market right now that it's got this nice, strong, I say strong, firm undertone. It just hasn't taken off. So it's taken a long time to get that 50 cents higher, but we'll get a bunch of information. Interestingly, in December, when line items were changed, the corn market was caught by surprise, or caught traders, it caught all of us by surprise by definition, because the numbers came outside of expectations. Remember, they increased exports 150 million bushels, crush 50 million, and we're still seeing those pace, strong pace. So, so low prices do in fact generate demand, cure low prices. And again, not to sound boring, but I think you need to get some other catalyst if you're going to get beans to move up, corn to move up. It's got to probably come out of Southern Hemisphere weather, or some big surprise on the report, which I don't know what it'd be, because that's why they're surprises.
Well, and I think about to last year as well. And correct me if I'm wrong, but I believe we saw a lot of our grain market highs the first trading day of the year, and then it was the downhill slide from there. I'm not saying that's the case here in 25, but it just feels to me that the way these markets have been acting and what we're setting ourselves up for here, I mean, it just feels like the risk management is so key to try and start the new year off on the right foot, Brian.
Right. Had a conversation with a customer this morning, and this isn't right or wrong, but he said, you know what? I don't like the price, but I'm going to start making some new crop bean sales and hope those are my worst sales. He said, I feel like I'm battling a bigger and bigger crop out of South America, which is true at this point. The numbers keep moving up. And then who knows what we'll have here at home, whether we'll lose acres or not. So it makes some sense. But to your point, um, when the markets tip over, they've in the last decade, they tip over really hard and fast. So there's a lot of regret and hand wringing, and I think that's why a lot of farmers, again, are selling. They may not be selling a lot, but what they're doing is continuing to move into the marketplace and get some things established there. So that is kind of the quick wrap, I guess, I'd have in the market is we've got to watch the southern hemisphere weather.
Brian Doherty with Total Farm Marketing with us here today on Market Talk. I should ask you about the livestock trade a little bit here, Brian. Cattle futures, strong day on Thursday to start off the new year. I believe we got a new contract high in May feeder cattle. I know
Yeah.
Feb live cattle was up at some recent highs. I mean, your perspective on just some of that good money flow in cattle futures to start off 2025.
Right. It kind of, if there was a surprise here in the last week and a half, it was probably the cattle market, right? General thoughts were, well, the holiday buying is kind of behind the market, and corn's kind of cheap. Cattle prices are good. They're going to feed them out a little heavier, and yet it's just straight up here. So I'm looking right now at any number of contracts, but if we look at just even that February contract, had a bit of a rough patch here on a downslide, Jesse, here on the 19th of December, down around 186 and a half, and all of a sudden here we're at 193 and a half. Just that quick, pick up $6-7. So very, I guess, encouraging, very informative, and informative in the sense that we're seeing the demand cycle in. You got some cold weather on the way. Maybe that's supportive. I'm not sure. I think it's just money flow into cattle. I think it's money flow into milk. Hogs have had a good run. They've pulled some back here. The only markets that really haven't had good money flow into have been beans and wheat. But good money flow into the livestock, tight inventory. We've talked about the supply side staying tight all year, and then big picture perspective is the just the technical buying, I think, right now, and that's despite a higher dollar. It goes back to maybe the demand over the holidays was just better than maybe people were thinking.
I think this too, and I've had some questions and some comments about this on our YouTube channel here in recent days, and I think this can encompass the whole protein sector: beef, pork, dairy, chicken, you name it, but maybe a little more leaning to the beef side. But a lot of folks are talking about still how high beef prices are at the grocery store, yet people still seemingly have been buying beef. I mean, just that consumer demand aspect. Do we reach a cliff here at some point early in 25 and have that impact this protein sector at all?
You'd kind of think so, right? And I was looking at some numbers and just kind of grinding some numbers. So we've talked about the cow herd or the beef herd being the lowest in 50 years, right? U.S. population's around 335 million. So just looking back and saying, well, what was the population 50 years ago? So in 2024, looking back then, you're talking somewhere around 240 million. So you've increased the population about 120 million, and pretty amazing. Got the same cow herd. So maybe it's just that simple that there's just enough people that are financially good enough. I've talked all year long about my concern about credit card debt and all this other stuff. Maybe that all weighs in at some point, but maybe there's just enough people that can afford it that price isn't all that important. I don't know how else to kind of wrap that into something that makes a lot of sense when you look at that population change the way that it's been. And then of course the world's increased as well. So yeah, we were I just double checked in 2000 or 1974, just a little over 213 million, 214 million. That is very substantial increase in a demand sector. Maybe that's the story. It's just that there's enough people, they got enough money coming out of COVID that it doesn't matter. I don't know. I can't quite fathom it myself that we can see this kind of demand for this long without a hefty correction.
No, it's interesting perspective on that, and I'm with you. It's something I think we're just going to have to watch as we move into 25. Brian, as we wrap it up today, anything final you would share or reiterate to folks?
Yeah, let's reiterate it. So let's look again at corn. Keep dishing some of this old crop corn out there if you know how to protect it. That is, if you want to re-own it, think about how to do that. There's a lot of time to get 2 crop years in between South America and North America. Or look at some put options in the old crop if we're going to keep in storage. One of the things that may have provided some support as I talked to farmers, there was kind of a real attitude out there into this week that said, I don't know, I think I'm just going to not do anything until after the first of the year. So now we're after the first of the year. So all attention goes to South America, but I think you want a defensive posture in these grains just in case they start heading the other way. They certainly did last year, especially after the WASI report.
Brian, if folks want to reach out to you there at Total Farm Marketing, have a conversation, look at their marketing plan as they get into the new year. I know a few ways to get in touch with you. How could folks reach you, Brian?
Best way is through a phone call, Jesse, 800-334-9779. Email me or us at Total Farm Marketing. You can hit me specifically, Brian with a Y, at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. Got a lot of nice resources on there and ways to communicate.
Always appreciate the time. And again, Happy New Year to you and yours. Thanks for being with us, Brian Doherty with Total Farm Marketing. Have a good one, sir. We'll talk to you next week.
Absolutely. Thank you very much.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.